Okay, maybe we can get started. Hello everyone, warm welcome. It's nice to say this in Sharm el-Sheikh. A warm welcome to our side event, Financing Innovative Approaches to Protect Against Loss and Damage in Climate Vulnerable Countries, which is organized by the Munich Climate Insurance Initiative and co-organized with the Pacific Island Forum Secretariat and the KfW, the German Development Bank. My name is Sönke Gräft. I'm the Executive Director of the Munich Climate Insurance Initiative, and we are a mission-driven, non-profit think tank working on advancing financial protection solutions to the most affected people and communities. We work on different areas. We work on governance and public sector. We work on risk understandings and also on concrete implementation of climate risk insurance solutions. And we are hosted by the United Nations University, the Institute for Environment and Human Security in Bonn. Before I start and introduce our great panel of the day, let me quickly show a video that is framing today's conversation by Ms. Sivoki Lavemao, Acting Deputy Chief Executive Officer, Budget Division, Ministry of Finance in Tonga.
Tonga, as you're all aware, is one of the top countries in the world that's most vulnerable to climate hazards. And in that sense, there's a lot of need for resources to deliver the climate change priorities of government. So that in terms of adaptation, mitigation measures, but also with the experience of Tonga with insurance finances that have been made available in the past, it's been made in a timely manner in terms of responding to the needs after a disaster hit, which has proven quite useful and also effective in terms of our response efforts to climate change impacts. But there's the need for advancing or for scaling up some of those finances because the impact of climate change is not decreasing, it's just becoming more intensifying, and the frequency is just increasing according to the recent reports that's made available. So in that sense, there's an urgent need for even the existing resources to scale up, and not only that, but have new and additional financing to what's already there. So these would help countries like ourselves in Tonga, a small island state, deal and adapt with these impacts of climate change.
I think the minister or the deputy minister brought up quite a few important points. For example, loss and damage is a very urgent topic. Tonga and small island developing states are at the forefront of the climate crisis. But we also, she also reminds us that we need a suite of solutions to tackle this crisis. In the past days, I've heard the phrase mosaic of solutions, and I think that's very much also the setup for today's panel and today's conversation. We want to explore this mosaic of solutions and what we can learn from that. I'm joined by an excellent setup of speakers today, and I quickly want to introduce them before we go into the first round of discussions. So to my immediate left is Sarah Ahmed. She's the financial advisor to the V20 group of finance ministers. Then we have Barbara Schnell, head of sector development from the KfW, which is the German Development Bank. One further is Carlos Lee Moresi. This is a long one. He's the Resilient Development Finance Advisor for the Pacific Island Forum and coordinator of the Disaster Risk Financial Technical Working Group under the Pacific Resilience Partnership Mechanism of the Pacific Island Forum Secretariat. Thank you for having you with us today. We have online Krishnan Narasimhan. He is the global lead specialist on climate risk insurance for the UN Capital Development Fund and the program manager of PCAP, which is a regional insurance initiative in the Pacific. He is joining us online. And last but not least, we have Sarah Kemet. She's a consultant, sustainable finance from the UNEP, the financing initiative. And I think this setup already kind of reflects also the motto of the COP, which is Together for Implementation. And we have seen quite a bit of interesting announcement and initiatives already at this COP. For example, we have seen the Global Shield that was discussed and announced, I think, on Monday in an event by the V20 and the Climate Vulnerable Forum. At the same time, the conversations are also under active discussions in the halls in Area D, where the technical negotiations are happening. I heard that they're happening on two fronts. They're happening on the front of the Santiago network, which is around technical capacity building for developing countries on loss and damage, but they're also happening on this broader conversation of financing loss and damage. What does it mean? What is the role of the climate convention? What is the role of the international community? And at the end of the day, also what kind of multilateral financing instruments should come out of this process. I heard that the loss and damage conversation on the Santiago network concluded yesterday, so we already have like an early success. But the discussions on loss and damage finance are very much ongoing. And I think one of the problems is that these discussions are often very abstract. And of course, there's also not really a commonly shared definition on addressing loss and damages. So that is another problem, and I hope we can tackle that. As I said, one of the initiatives launched here is the Global Shield against climate risk, but we've also seen other commitments coming forward, including pledges to risk pools, regional risk pools, African risk capacity, among others, and hopefully we can also touch on this conversation during the discussions. I would now like to start with a quick tour de table with the different organizations making a quick statement. And maybe you could introduce yourself and also what you're working on and what you're bringing to the table when it comes about addressing loss and damage. I want to first start with Sarah Ahmed. Thank you. Sarah, you have the floor.
Thank you, Sönke. And good morning, everyone. My name is Sarah Ahmed from the V20 Secretariat. Just to note that on the V20 side, the debt crisis that we currently have is perpetuated by the climate crisis, because as disaster strikes, countries are forced to borrow to replace the bridge or home or the job that was lost. And the losses are stacking, as we already see, and the financing options are shrinking. And this is why the financial protection agenda is also front and center in the V20. And so I look forward to presenting a bit on the Global Shield against climate risks, as it was launched here at the COP this past Monday. Thank you.
Okay, thank you. Next, Barbara.
Yeah, thank you. Yeah, I'm very, very pleased to be part of this panel. Yeah, I represent KfW Development Bank. I head the sector policy department. And maybe first a few words on KfW. It's the German promotional bank supporting in Germany small and medium enterprises, important policy fields such as the energy transition, municipalities, students, and also in a more general sense, the transformation of society. And we have an international business which is comprised by commercial banking internationally, and also development financing on behalf of the German government. And KfW Development Bank is the branch of KfW which I represent. So in development finance, one of our key focal areas is climate finance and also dealing with climate-related risks, coping with disasters. That's a major concern of ours because we are very aware that these climate-related risks and disasters are about to erode the progress we've been making internationally in development cooperation. And I personally am very attached to this field. I serve on the strategic boards of relevant initiatives such as the African Risk Capacity, which was already mentioned. Yeah, so what do we do in climate risk management? We support our partners along the entire process. First of all, step one, risk analysis. We do institution building and technical assistance, and we fund the research in methodologies of adequate risk analysis for our partner countries, such that the climate-related risks are understood and informed decisions can be taken. Then step two, risk mitigation. First of all, of course, as a development financier, we have to do our own homework. So all of our projects and programs in the various sectors we are active in, we analyze the climate-related risks, and our portfolio managers incorporate the results of this analysis in the project concepts such that we build climate-resilient infrastructure to start with. And then step three, the management of the residual risks. There we support our partner to obtain adequate cover. And that is an important piece in the puzzle of development finance. We are convinced of that. So we have supported from the very beginning the G7 INSU Resilience Initiative, which was started in 2015 with the goal of having 500 million people in addition covered for climate-related risks. And we have built a pretty significant portfolio with various programs. The African Risk Capacity is a risk pool attached to the African Union and provides risk cover for countries. So that's one example. Another example is the INSU Resilience Investment Fund. That's a fund which invests in private companies providing risk products, insurance products to final beneficiaries such as small and medium enterprises, smallholders, microfinance clients, etc. And we do so by providing grant money to this fund, and this grant money absorbs first losses, so risks such that other investors can join the fund, and the fund has the opportunity to scale. And then we also support product development with the INSU Resilience Solutions Fund. And this fund provides grant support to insurers and public entities who form a partnership. And they have calls for proposal. And the result is a pretty significant portfolio of insurance products being developed, crop insurance for certain regions, or countries having their municipal infrastructure insured against climate-related risks. So it's a pretty diverse product range. Yeah, so this is how we think we can support comprehensive risk management and address the preparedness for disasters and also the damage once a disaster strikes. And we stand ready to jointly look for additional solutions, and the Global Shield is a perfect opportunity for that. Solutions at project level, at macro level, at the international level. Thank you.
Thank you very much. Let's move next to Lee.
Yeah, thank you, Sonke, and thank you for the opportunity to be on this panel. I represent the Pacific Island Forum Secretariat, and we're basically primarily a policy-based political organization, and we provide advice to member governments really on a range of things, including on disaster risk financing. When I say financing, really and thank you to the former speaker, around the range of products that they offer. In the Pacific, we have a framework for resilience development that we are trying to implement, and really it's about integration. The disaster risk and the disaster response is not just something you respond to after disaster. It has to be part of the whole development continuum, so that when you're actually developing policy, you're actually looking at the development aspect, reducing risk, the resilience aspect, and obviously when disasters do strike, that you are able to respond obviously with adequate financing in a timely manner, but also the recovery aspect is quite important, so that the Sendai framework talks about building back better, and I think that's a very important aspect of the work that we do. But even before you build back better, you build back in the first place, you build better in the first place before you don't have it, so you don't have to build back, or limit the opportunity to respond in terms of infrastructure damages, but also beyond the infrastructure per se, the economic infrastructures, looking at actually overhauling the whole systemic approaches, so that, because when disasters hit, a lot of the measures are measured in terms of economic impacts, GDPs, those kind of measures, but there's also a lot of social impact. So bringing the disaster risk financing so that it encompasses a wider spectrum of how you respond and how you actually set integration. In that respect, I head a disaster risk financing technical working group that actually has members, quite a broad membership. They include civil society, community groups, youth is represented, development partners obviously, development banks, and member governments. So getting those different stakeholders to actually start to realize and understand the needs, and so that we can address fit-for-purpose disaster risk mechanisms. In that respect, I'll have the opportunity later on to talk about certain elements, but if you come from the Pacific Island countries that are very small in size, small in economic basis, limited resources, you always hear this term to be innovative. But sometimes innovative does not necessarily mean to be complicated. One of the issues is around access, and that goes both in the disaster risk space as well as the climate change financing space. We always talk about access, and then we come up with these terms like innovative financing solutions. Sometimes they're actually more complicated than what you're trying, and create more complications than the solutions you're trying to look for. So in that respect, we're looking for development partners like the banks, development banks, to offer simplified solutions, noting that there are certain criteria and principles of disaster risk financing. One is obviously fit for purpose, timeliness of disbursement, and making sure that it reaches the people who need it the most when they need it. And in one element, I see one of our colleagues from the UK in the room, very big push on also bringing the private sector into the conversation. I'll talk about that later on as well, especially around the anticipatory elements of disaster risk financing. I'll stop there for now, and I know I'll have the opportunity to expand on specific products later on. Thank you.
Sweet, thank you. Let's now test our online connection. Krishnan, over to you.
Very good morning, Swanga. Thank you very much for this opportunity to participate online. I was there physically till last week, but I have to come back here for some urgent work. The UNCDF that I represent leads the implementation of the Pacific Insurance and Climate Adaptation Program, which is a multi-year regional program focused on the Pacific small island developing states. And the objective of the program is to build the financial preparedness and resilience of low-income Pacific Islanders. It can include small business as well, but largely smallholder farmers, fishers, market vendors, and MSMEs. This program was started in 2021. It's a 5-year regional program. Due to, of course, COVID reasons, we restricted our ambition initially to Fiji and Tonga, Vanuatu in that order. But starting next year, we will be expanding to other Pacific countries in a phased manner. The first ever parametric micro-insurance products were deployed last year. And this was to fill a very important gap at the micro and the meso level about the lack of appropriate and affordable risk transfer instruments which could be deployed for climate disaster risks. Of course, the program is supported by the governments of New Zealand, Australia, the India-UN Partnership Fund, and the DROA incubator set up by the Luxembourg government. So in a very short time, I would say that through a market systems approach that UNCDF follows, where we recognize the importance of various players, both at the policy level and the implementation level, and for the last mile reach using digital interfaces, we have been able to create a very good ecosystem in Fiji, especially where in the first year, last year, about 1,388 households were covered. And that has actually seen a scale up for this year. The cyclone season has just started from the 1st of this month. Also already more than 4,000 households are now covered in Fiji, and pilots have also been launched in Tonga and Vanuatu with nearly 200 to 500 households being covered in those countries. So that gives us a lot of confidence to ambitiously program for expansion, not only in the Pacific SIDS, but also in other underdeveloped markets where such solutions can be replicated. I think I'll stop here for for the introductory part, and I'm happy to come in later. Thank you.
Thank you, Krishnan, also for introducing the PCAP work where we are also partnering with you. I want to now finally move to Sarah Kemet from the UNEP Financing Initiative.
Hi everybody, and thank you so much, Sanka, for inviting me to participate in this panel today. What I wanted to do was give you a brief outline to UNEP-FI, that's the United Nations Environment Programme Finance Initiative, and then focus in on one particular programme that's running at the moment that's very relevant on this topic. So UNEP-FI is a partnership between the UN and the private finance sector. We've now been around for about 30 years. We've just celebrated our 30th birthday. And what we do is we convene the private sector to set norms and to build frameworks to improve the sustainability and the fitness for purpose of the financial sector. So we focus in on three key sectors within the finance sector. We look at banks. We've developed the Principles for Responsible Banking framework. On investors, early on we incubated the Principles for Responsible Investment, and that spun off into the PRI that everybody knows now. And we also run the Investor Leadership Programme there. And we also run the Principles for Sustainable Insurance. And in all three of those financial sectors, we cover thematic issues such as climate, being one of the very important ones, but also not forgetting nature and biodiversity, social issues, and things like resource efficiency and pollution with the circular economy. So some of the work that we do also focuses on risk. So we run a big program on TCFD work, but as we all know, the only sensible solution to climate risk is really to focus on impact. And to that end, we have now established a good suite of net zero initiatives. So the first one that we formed was the Net Zero Asset Owner Alliance. And this includes pension companies, but many insurers as well on the asset side of their balance sheet, aligning to net zero. We run the Net Zero Banking Alliance, which started in April 21, which has 40% of the global banking assets committed to aligning to 1.5. And we also have the newest of these is the Net Zero Insurance Alliance. And this is a very new framework that's still being developed, really. We're working very closely with PCAF on the concept of insured emissions and with SBTI on the target setting protocols there. So that's kind of UNEP FI in a nutshell, and I think we've heard a lot at this COP about the macro level support at governmental levels, and the programme that I would just like to highlight today is one that's very much at the micro level, and that's the Sustainable Insurance Facility. This is housed within UNEP FI, within the Principles for Sustainable Insurance, and it's led by the finance ministries of the vulnerable markets within the V20. And the core funding for this has come from the German government. The mission for this programme is really to improve climate resilience in these vulnerable markets through the provision of insurance. So we all know that asset owners and banks are hugely affected by their counterparties risk. That's what those businesses are largely focused on, and more insurance really is needed. Insurance and insurability can really impact the value of an asset. It can impact the financial provisions that a bank needs to make, and it can impact that through affecting the probability of default and the loss given default. So, you know, the problem of under-insurance is really big. There's a massive insurance gap. And this is especially true for micro, small, medium enterprises, or MSMEs. This is really chronic in all of these markets and for all risks. And I think, you know, we've all got a lot of work to do to kind of explore and understand the barriers to insurance in those markets, which may relate to things like affordability, availability, the understanding that people have of insurance, and also cultural aspects. So what the Sustainable Insurance Facility is looking to do is to be really tactical and operational, and to seek out and develop projects. So really to sort of identify the potential for projects and bring funding to help these MSMEs, and to respond to disaster and risk management, and become more resilient to climate change, and recover more quickly from extreme weather events. So this kind of resilience can really help to speed the recovery after a disaster and reduce displacement of people. And I think, you know, when a disaster like that happens, when a risk crystallizes, one of the things that really impacts the outcomes, or what happens after that fact, is who bears that risk, and who bears the consequences and the loss. So I would just like to wrap up by expressing our immense gratitude to the other panelists for being fantastic partners on this project. And over time, we will be seeking to expand the coverage of the projects. And I think it really sort of exemplifies the kind of the strapline of this COP, which is together for implementation. So thank you.
Thank you, Sarah, and thank you for the panelists for this quick round of introduction. I would now like to start the thematic conversation and also go into a moderated discussion. Actually, I have to say we were a bit, of course we were happy when we received the confirmations after the merger request by the official UNFCCC zero system, but we were also slightly concerned. We are at day 11 of the conference, and we've all been to many, many events. So I think everyone can feel that. We were also concerned about the size of the room. That's a separate conversation. But anyways, we thought, what can we do? Also, some of our partners already left the COP. The Finance Day was, I think, last week, Wednesday. Many stakeholders left. So what we try to do is we actually want to ask, or we took video recordings of people at the conference to ask questions to the panel. So let's see if this is working. These people represent the different stakeholders that are relevant to also make solutions in the loss and damage space operational. And I think we can start right away.
My name is Irfanullah from Pakistan. and I'm sure all of you know about the recent flooding in Pakistan, which left 1/3 of the country underwater. And still, majority of the affected people are looking for the support from the polluter. So, no, my question is how the international community are addressing the loss and damage, especially if we talk about the vulnerable community in the vulnerable countries around the globe. Thank you.
Okay, thank you. I think Irfan makes a very valid point. So what is the international community's role in making sure that most vulnerable countries receive financing for the climate-related damages they have? I think that's a question that goes to Sarah. Sarah, over to you.
Thank you, and thank you to the youth delegate for the question. So I guess perhaps this is an opportunity to present the Global Shield against climate risks, because as we know, it's important that we try to bring the international financial architecture to make available protection instruments for countries, enterprises, and communities. So I'd like to start a bit on the Global Shield. So the intention here is to really increase financial protection against accelerating climate risks through prearranged and trigger-based finance, such as shock-resilient social protection, parametric and forecast-based financing for anticipatory action, risk transfer for regional or municipal risk sharing, climate-resilient debt restructuring, and business liquidity protection, just to name a few, that gets delivered in a fast and effective manner for communities on the sovereign level and for micro and small and medium-sized enterprises. So the Global Shield is proposing an improved system to make the financial protection more systematic, coherent, and sustained. And within the composition of the Global Shield is an international coordination unit supported by financial vehicles and specific in-country processes. So the Shield will work with existing partners, with new partners and institutions to systematically analyze countries' protection gaps and design, fund, and facilitate packages instead of what's happening now, which is an ad hoc basis, one by one. But it's important that we have the comprehensive portfolio of tools available, which I think is in the COP being coined as the mosaic approach. And critical to the Global Shield success is really building local and regional risk markets supported by international risk capital across climate vulnerable economies. And if we go to the next slide, I'd like to just share the structure of the Global Shield. So the Shield is led by governments and advised by technical partners, including multi-stakeholder processes that include civil society, academia, development partners, including the risk industry, governments. And there are three key facilities within the financing structure. So one is the World Bank's facility, one is the CVF and V20's Joint Multi-Donor Fund, which I will speak more about in the next slide, and the Global Shield Solutions platform in the Frankfurt School. So the V20's fund here focuses on 5 elements. So one is the loss and damage funding program, which is specifically how the multilateral system can deliver grants to communities right away. And so this shows a more direct access path, because I know over the last years direct access is an issue and reaching communities has also been an issue. And so this is something that the V20 is pioneering with support from philanthropy, the Open Societies Foundation, as well as the government of Wallonia. The second is on premium subsidies and capital support. The financial protection gap across the V20 is at 98%, which means there's only 2% of the market actually working. And so value recognition has to be built. So premium subsidization, capital support to get these instruments on the table and the options on the table. The third is off-balance sheet guarantees to reduce the cost of capital. So across the membership, cost of capital is between 6% and 30%. This means that adaptation is incredibly expensive, and anything with upfront investment is expensive. So we need to find a way to provide long-term capital at lower costs in order for it to be viable. The fourth is distribution channel enhancement. So critical to success of any of these instruments is that it reaches the beneficiaries, whether that's government, the local government, communities, the enterprises, the employees of those enterprises. And so a lot of this is linked to the Sustainable Insurance Facility, which we will hear more about by UNEP FIPSI in the next presentations. The last one is something that we have yet to really tackle as a community, and that is slow onset risk. We have rising sea levels, displacement is already happening, and we need to pioneer solutions now so that slow onset risks could be dealt with, and that it's part of the instruments of financial protection. So that just gives an overview of the V20's component in the Global Shield. And if we run to the next slide, maybe I can just touch base a little bit on the loss and damage funding program. So part of this is replacing the losses, so repairing and rebuilding community buildings, water supplies, medical facilities, clinics, sanitation facilities, public housing, but also livelihood replacement, asset replacement. Because right now what's happening is when disasters strike, we're typically waiting around for aid or other funding to be available. And it's important that there's a way that we can trigger resources either ahead of time or right away in a way that doesn't put the burden of proof on the most vulnerable. And so this is something that the V20 is pioneering. Another critical part is, of course, leveraging adaptation resources, because we should not just build back the same, but build back better. And so this program aims to show that pathway of how this could happen and how the multilateral system can thus deliver at the community level. And I think I'll stop there in the interest of time, and I pass back to the moderator. Thank you.
Thank you, Sarah, and thank you for explaining and responding to the youth delegate, explaining the why, the what, and the how of the Global Shield from the V20 perspective, and also diving into the Joint Multi-Donor Trust Fund. I think there have been some questions around that, and thank you for providing the details. Let's now go to the next video question.
Hello, my name is Julius Ngoma. I'm from Malawi. I'm representing the Civil Society Network on Climate Change. Here at COP, we are trying to follow the issues of climate and disaster risk financing, including loss and damage. CDIFI is very important for us in a country, as since we are actually heavily impacted by impacts of climate change. Droughts, floods, cyclones are actually hitting us hard. We need financing in so many ways to manage these disasters. But I wanted to ask a question whether there are instruments for risk layering that can help us at national level.
Okay, so this question of Julius on what are the pebble stones in the mosaic on the national and government level. I think this could go to Lee first, then followed by Barbara. Lee?
Yes, thank you for the question. Obviously, the way it's framed around risk layering, obviously from the national perspective, for disaster risk financing, and I'm sure I'm preaching to the converted, you have risk transfer or risk retention. From a national government's perspective, the risk retention element is really about the national contingency funds, in a sense, taking on the risk itself, or budget reallocations, post-disasters. From the national approach in the Pacific, we are fortunate enough to have partners like the World Bank and the ADB. The ADB has a program called the Pacific Contingency Contingency Fund Program, that really takes some of the allocations to member countries that qualify under the Assistance Development Fund and allocates that into a pool of funding that can be triggered for disbursement during a disaster. And the only trigger mechanism is a declaration of a state of emergency. Initially, the fund was the program only related to natural hazards and natural disasters, but obviously with COVID-19, there was expanded to also include other disasters, including health disasters. So that instrument really is a sovereign type instrument, and the members that are country members who are members of the ADB or the Asian Development Bank qualify. Obviously, within the ranking of certain governments, there are certain countries, some qualify under grants-based assistance, and others qualify under lending assistance. So the lending assistance and the grant assistance are policy-based, meaning the country has to demonstrate and also have national disaster resilience or disaster risk reduction policies that are linked to building resilience to qualify for the, so that you can see there's a continuum or a planned methodical approach to qualifying under this kind of instruments. So you have to actually start doing policies and thus implementing mechanisms and programs that build resilience. But we know that resilience, you can't foolproof 100% foolproof all infrastructure or communities. So there's an element when a disaster happens, you can get immediate payouts. On top of that, we also have the Pacific Catastrophe Risk Insurance Company, very similar to other similar modalities around the regions. And you might ask the question, why do we have a Pacific-specific catastrophe risk insurance program? And the response to that is because we have different kind of risk and different elements of risk that are particular to certain regions. And it's important that the products are fit for purpose. I'll just give you a quick example, like one country signed up when the promotion came out. It was a very new idea, signed up for the insurance policy, but their risk is actually, but the insurance policy is around cyclones. But this particular country's risk is really around droughts. So there's a mismatch. And really, it's really important that when we start talking about DRF or disaster risk financing products, that we really understand the concepts of it. Another example is a recent example in Tonga with the volcano eruption. The insurance policy under catastrophic risk insurance program or the policy covered them for tsunamis. However, in the fine print, it says earthquake-induced tsunamis, not volcanic-induced tsunamis. Even though the damage was caused by the tsunami, most of the damage to the coastline was from the tsunami. Unfortunately, they didn't go to payout. So we really, while we're setting up this, I mentioned before in my introduction around innovative financing solutions, we also have to make sure that they're not so complicated that you really need to read the fine print of what you're signing up to. Beyond that, the Pacific have established the Pacific, if I can just do the slide on the Pacific Resilience Facility. And this is really a response to community-based resilience building. And I mentioned before as well about access is an issue. Another issue that we're trying to address in the Pacific Resilience Facility is scale. Most communities want $100,000, $200,000 project, whereas the GCF, the Adaptation Fund, wants a $10 million project. For a small community to have the capacity to be able to implement resilience-type programs at that scale is almost impossible. And just the process to even just access their funding is quite cumbersome. So the Pacific Resilience Facility is an approach to be more anticipatory in the sense that we're actually trying to build resilience before disasters do happen. And I also mentioned the elements of the private sector. To actually get the private sector, a small-scale private sector, to start investing in low-carbon emissions industries. So the question, if I can just also touch on the previous question, how do you actually address losses and damage? My response is actually you start with mitigation. You start by reducing the actual climate risk. So in the framework for resilience development in the Pacific, we've integrated climate risk and disaster risk, because the disaster risk is being enhanced by the climate risk. So it's really important that the facility like the Pacific Resilience Facility also looks at low emissions development to be able to address that, if you like, the starting points of all these issues that we're here in a climate COP. So when you're doing mitigation, and because we can't keep up pace with mitigation, we have to adapt. And even adaptation at scale, now we're talking about transformational adaptation, the financing is almost struggling to keep up, if you like. I'm not saying that finance is not there, finance is definitely out there, but finding modalities that are able to address the specific fit-for-purpose adaptation, because we can't keep up, we're now starting to deal with loss and damage. Because we can't keep up with building seawalls higher and higher because of sea level rise, we're dealing with displaced coastal communities. And now we're talking about loss and damage. So it's really important that we start addressing these issues, even though, for example, the Global Shield definitely has a place, and it fills a certain gap. The elements where we're talking for small island countries in the Pacific, mainly in the Pacific and also in the Caribbean, try and address loss and damage before you suffer the losses, before you actually have to deal with the damages. If you can address that before you actually suffer the losses, before you have to move communities, or if you do have to move communities, have pre-arranged programs, know where you're going to shift them to, have the social infrastructure set up so you don't just move them and then create another disaster. So those are some of the elements we're trying to address with the Pacific Resilience Facility as a regional approach. Thank you.
Thank you, Lee, and also thank you for making the point on what exists in the Pacific region in terms of international instruments and what doesn't. I want to now move on to Barbara and take the perspective of a development bank. Barbara.
Yeah, thank you. We actually developed a product which combines lending with insurance cover, and it's called shock resilient loans. So if a disaster strikes, if a climate risk materializes, if there is a drought, the loan repayment is covered by the insurance attached, such that the government keeps its fiscal space to address the measures needed for recovery to help the people who actually suffered from this drought, flood, or whatever. So we have used grants from our government to develop this product, and we are currently piloting it with the West African Regional Development Bank board. And we provide our funds to board at concessional rates, and we also subsidize the insurance premiums, which the borrowers from board have to pay in addition to the interest rates. So board passes on the funds of this loan to members of the West African Economic and Monetary Union for adaptation programs, projects. And their debt service is taken over by the insurance if a predefined risk materializes, as I just said. And my personal opinion is one of the key benefits of such a product, apart from the fact that certain risks are being covered, is that when you engage with your client on a product such as this, your client, the country, has to analyze the risks it faces, has to understand where are my priorities in taking precautionary action, and then also to develop a plan. If this drought happens, if this flood happens, how do my funds reach the people who suffer from this event? And how can I help them as quickly as possible? So to engage in this and also to understand what is the value of an extra insurance premium I pay in addition to the interest rate on my loan, that is really what this capacity building is all about, and it comes along with discussing and negotiating with your client on a specific loan contract. Yeah, thank you.
Yeah, thank you very much. And I think also the role of debt-based instruments is under active discussion, so we might be able to pick up on the conversation in the final discussions and question and answers. With that, I would like to conclude the national level instruments and maybe move on to the next question if there's one.
Hi, my name is Victoria Seifert. I'm with WTW, formerly Willis Towers Watson. Pleased to be here today. As we all know, micro, small and medium-sized enterprises are the backbone of most climate vulnerable economies. They provide significant employment opportunities, especially for women, and contribute substantially to GDP as well as to export export activities. And against that background, I would like to hear from the panelists what kind of climate risk insurance products, generally financial products addressing climate change, are out there for MSMEs, and how you are working to make sure that those products are inclusive and really reach the last mile.
Okay, and thank you, Victoria. I think for this question it would also be quite nice to hear a little bit more about the Sustainable Insurance Facility, and in fact we also have a video from Brandon Matthews, who is in Sarah's team. He's the global coordinator of the V20 Sustainable Insurance Facility, and he provided us with a video explainer.
Good afternoon. I'm Brandon Matthews, Global Coordinator of the V20 Sustainable Insurance Facility, or SIF. I'm sorry that I cannot be with you all today. SIF is a project pipeline facility that aims to ensure micro, small, and medium enterprises in climate vulnerable markets. It's guided by the V20 finance ministries, supported by Germany's BMZ, and an initiative within UNEP's Principles for Sustainable Insurance. We are fortunate to work with partners such as MCII, Insure Resilience, ADB's ACLIF, and others. We're eager to work with projects such as what Krishnan and Carlos are working on in the Pacific Islands. SIF's role is to identify and define appropriate projects and get them funded. We aim for at least 14 projects across Africa, Asia, and Latin America by the end of 2025. Each project must answer one question for 4 different parties: MSMEs themselves, insurers, last mile channels, and investors all need what's in it for me. MSMEs know that they need to deal with risk. The challenge is to move that need for insurance to want and willingness to pay. Insurers want premiums but can't afford to take every risk. Each policy thus needs two customers: an MSME to pay the premium, or somebody to pay it on their behalf, and an insurer to accept it and put their capital at risk. Connecting these two is the last mile channel. This can be a cooperative, association, bank, corporate, whatever. Launching anything new in these existing businesses always requires a clear rationale. What's in it for me? Last but not least, investors, whether private or public, also require what's in it for me. This can be a financial return or impact. But without a clear plan and business case, nothing happens. We provide expert staff for projects and secure buy-in from finance ministries. This service includes dedicated regional experts to link local to global funding, local projects to global funding, as well as local project consultants to drive action on the ground. I welcome anyone to contact me or to speak with Sonka and team on site if you think we might be able to help you start or scale up insurance for MSMEs.
Okay, thank you for this quick introduction, and just quickly asking Sarah if there's anything to add.
No, not a lot to add from me. I think the beauty of this project is bringing together those 4 different groups of stakeholders: the MSMEs, the investors, the insurers, and those last mile channels, and making sure that they've all got some skin in the game, and they've all got benefits to be had from the project. So that's all. Thank you.
Yeah, thank you. And we have 2 Sarahs on the panel, so the other Sarah also wants to say something.
Yeah, just some context on the Sustainable Insurance Facility. It was in 2018 when the V20 during an Asia-Pacific regional consultation, brought forth the idea of the Sustainable Insurance Facility, and the intention really is that there needs to be business continuity post-disaster, and there needs to be a way to support the continuation of production and productivity, and to have the employees as well supported. Across the membership, over 90% of the population depends on MSMEs for employment, so they are critical and they are a growth driver. And so this was the aim at the time, and now we're seeing that there are great examples in the Philippines, for example, of micro, small, and medium-sized enterprises with such protection tools. And now the quest is really, how do we expand this in a way that enables more productivity and to link it as well with other existing financial products.
Thank you for this important context. I would now move over again to Barbara. You have a funding program that also fits to the question.
Yeah, the question, how can we as a development bank reach small beneficiaries such as micro, small and medium enterprises, or even smallholder farmers, etc. So I already mentioned that under the INSU Resilience Initiative, KfW is invested in the INSU Resilience Investment Fund. And also, on behalf of the government, on behalf of this, or with this initiative, we are invested in another extreme weather risk pool, the Natural Disaster Fund. And I'm not going to focus on these funds now because we are interested in an answer to that question. But the manager, the fund manager of the Natural Disaster Fund is Global Parametrics. And that is a specialist in risk modeling, in a provider of parametric risk transfer solutions. And Global Parametrics has developed one of the world's largest non-governmental climate insurance programs called African and Asian Resilience in Disaster Insurance Scheme, a long name, and the abbreviation is ARDIS. And that program is offered by Vision Fund International, and Vision Fund International is a institution serving microfinance institutions around the world. So now, if we have a flood, a drought in a particular region where there are many clients of a microfinance institution, you can pretty much imagine that the people will withdraw their savings and will stop repaying their loans if they suffered from the climate-induced disaster. So ARDIS, in that particular situation, provides liquidity via the Vision Fund International. And so the microfinance institutions, they can sustain their business. They actually benefit from business continuity and by receiving funding, and they can even provide recovery lending to their clients. So this is, that's the risk cover the insurance ARDIS provides. And it started out in 11 countries. Now ARDIS is already operating in 27 countries, in Africa, in Latin America, in the Middle East, in Eastern Europe. So quite a diverse portfolio they have. And so far, they have had 5 payments for floods, droughts, and cyclones. And in 2021 alone, they reached 675,000 micro and small medium enterprises and other microfinance clients. So I think this is a very effective way to provide insurance cover to these beneficiaries we want to reach.
Okay, thank you very much. With that, I think we got some insights on how instruments could look like at the mesoscales, and I would like to continue with the next video question.
Bulbinaka, I am Salote, I'm from Fiji, and I'm a researcher at the University of the South Pacific. Every year we have a cyclone period from mid-November to mid-April, and for sure we will be affected. So our farmers and our fishers are greatly impacted, especially when it's their only means of livelihood and their survival depends on these two main areas. Coastal communities get greatly affected because when there's no fish, that means no money, no food on the table. So we wait on government assistance to help us resuscitate us, and it becomes an issue. My request is if there is any assistance on how we can sprinkle down finances to assist not only to national or global national level or even provincial level, but to grassroots, because I believe this is where the focus point should be. Thank you very much.
Yeah, I think that's a very important perspective. So how can we cover the community and individual level? And maybe let's move to Krishnan, who's online. And I also noticed that Brandon called up on you in his video statement around your role on MSME. So maybe you can also cover the previous questions as well.
Yeah, thanks, Luca. So actually, what Salote just mentioned was the actual development challenge that we are trying to address. When we set up this program, we found that there was we actually started with the baseline of 0. There were absolutely no climate risk transfer instruments at the micro and even at the meso level when we started the program. So therefore, in terms of being inclusive, a lot of demand studies were done to create the first cohort of products. And then subsequently, we also worked with the University of South Pacific to do further research in a cross-section of both beneficiaries and non-beneficiaries to find out what are the product improvements that they wanted. And the products that are available today is actually offered by the private sector. There are multiple insurance companies in these markets, which I spoke about, these 3 countries. Primarily, there are 2 local companies in Fiji, and there's 1 regional insurance company that takes care of the regional expansion. So which means it's, these are products offered by the private sector, and these are market-based products which are available through cooperatives and associations and, market vendor associations to reach the last mile. For that, we have actually worked with local fintech partners to develop onboarding, like mobile phone, smartphone-based onboarding platforms, as well as integrated that with mobile money for both payments as well as for claim payments, both for premium payments and claim payments. Through this, a number of smallholder farmers and fishers have been reached in the last couple of years. As I gave before some figures, so this year it's already touching 4,000 plus households in Fiji and expanding to other countries. On MSME as well, there is a lot of research that has been completed, and there's a big access to finance gap for MSMEs. And we are confident that we will be developing appropriate and affordable products for MSMEs as well. On the subject of loss and damages, one question will obviously come up, saying that, okay, these are market-based products for which the people who are suffering are actually paying their own premiums. Is that the right approach? So right now, it's like, to give an analogy, now why do we teach our kids like swimming? We can't wait for the Coast Guard to come and rescue us when we are in the high sea. So we need to learn at least to float and not stay afloat. So what we have created is a culture of self-dependency, and communities are favorably responding to these initiatives when the products are appropriately packaged and delivered through appropriate channels and made affordable through some very innovative approaches that the cooperatives have taken in terms of advancing the premiums and recovering it later when they pay for the crops and when they pay for the milk and when they pay for other produce that they collect from the farmers. The same approach we intend taking for MSMEs. We have been working with the government, like Department of MSMEs, and also with various associations involved with MSMEs, including the chambers of commerce, etc. So therefore, this approach has helped see some tangible work on the ground having been completed. So as and when the issue of premium financing is solved, these are appropriate mechanisms that are readily available in which scaling up can be done in a very rapid time. I think I'll stop here in the interest of time. Thank you very much.
Thank you, Krishnan. I would now again move to Barbara to give us a quick input on KfW's approach.
Yeah, how do we reach the people in the regions? That is the question. And for KfW, it has proven to be very, very effective to work with non-governmental organizations whenever we want to be very close to the people whom we want to actually benefit. And this example, which I'm going to present, is also one model we support via one of these funds I have mentioned a couple of times. This time the Natural Disaster Fund. Global Parametrics has actually partnered up with Oxfam and Plan International, two NGOs, and developed the Be Ready program. And that is building resilient, adaptive, and disaster-ready communities. So it uses parametric index-based forecasts to release cash prior to an extreme weather event. And of course that is very beneficial and adds a lot to the support we can provide if the people receive funding before a disaster is certain to reach them or they suffer from them, a region suffers from it. We have piloted, or the program Be Ready has piloted this approach in the Philippines in a region called Salcedo. I just asked Sarah if she knew that region. She's aware of it. And there, the local government was in a position to warn the people 24 hours before a cyclone was about to hit and evacuate everyone. And the cash payments were released very early on so that the people could actually buy essential items such as food, water, medicine, and also right after the cyclone, material for repairing their houses. So of course you can imagine, if we even could imagine to be in such a disastrous situation ourselves, how much that can actually help you to get through a difficult situation like this. So the program is really striving for scale and also for a diversification of the perils it covers, and also reaching out into different geographies such as Indonesia, Sudan, and covering risks such as floods. So the success factor also is to work very closely with the communities in the definition of the triggers, which have to be there in order to initiate a payment. And I think this is really, really key to involve the people in the regions. Carlos has also alluded to that, because it's so crucial, because they know their situation, and also for them to get their heads around what are the prime risks we need to be prepared for. And the communities also work on contingency plans, they get risk maps, they simulate these events, and all of this, of course, is raising awareness and helping the people to cope with those sometimes very, very harsh realities. Thank you.
Thank you, Barbara, for that example. And I think this very much concludes the thematic conversation we'd like to have. What you saw were like different approaches coming from the international level to the national level to the meso level and to the community and people's level. Now would be actually the time to involve you. You mean the audience in the room as well as the online audience. I think you have the comment function and we have 2 room mics. So I would ask everyone if there are any questions. I would first collect the first round of questions and then pass this on to the panel. So, okay, thank you for breaking the ice. We have one question to my left.
Hi.
And if you could quickly introduce yourself, that would be very nice. Thanks.
Hi, everyone. Can you hear me? Hi, good afternoon. Thanks for being here. My name is Gabriela, and I'm from the Dominican Republic, a country that I saw was on the beneficiaries list of one of the initiatives listed. And my question is, a couple of weeks ago, the Dominican Republic underwent one of its worst rains in history. We got a whole month's worth of rainfall in a matter of 3 hours. And my question is, even though these approaches focus on prevention and on ensuring that we don't have to deal with a post-crisis, a post-emergency situation, how can these mechanisms work in an event where perhaps there wasn't sufficient planning and we have to focus now on reconstruction? How do individuals access this kind of help? How can the people most affected by these situations get information on how to be eligible, or is this on a country-by-country basis? Thank you.
Thank you for the question, and let's add another one. Yes.
Thank you. I'm Niveen from the Global Eco Village Network of Africa. So we are connecting communities and eco villages along Africa, and they are doing really wonderful job in the communities. But I'm asking here about the possibilities of financing or these projects for scaling up, like having one model eco village in one country is not enough. But what are the possibilities for financing? And we in the Gen Africa, we have really a problem financing these projects. We are always approaching the big organizations or the big internationals, and then usually it has to be led by some European countries, not by African organizations. Thank you.
Okay, are there any additional initial questions?
So I am Kunal from India, and I work in the National Disaster Management Authority. I am not a finance guy, so I don't understand the language of finance much, but I'm negotiating for the loss and damage financing arrangement, negotiating hard for San Diego Network and for the financial arrangement. My question is simple. I have been right from the floods for 2 months. I am back to COP, so I have the ground zero scenario. My question is, apart from the insurance schemes and the global shield and all the things that we are talking about, my idea from the field is that preparedness and capacity building of communities is very critical. And if the communities are prepared with the required knowledge and skills to face a disaster, that makes job much simpler. I don't find any instrument available to upgrade. I don't mean early warning systems, but making the communities prepared to face a disaster. So that is very critical. I was thinking to hear something on that. Somebody mentioned that mitigation is the cure. Mitigation in the disaster perspective is different from mitigation in the climate change perspective. I also don't see much funding options available for mitigating various disasters. So 2 quick questions to begin with. Thank you.
Thank you for that input. And is there any, I think we can take a last question. Okay, gentleman in the back.
Well, thank you very much. My name is Mukhtar Tanko. I work with a project, Agroclimatic Resilience in Semi-Arid Landscapes in Nigeria. It's a World Bank funded project, and part of what we're doing is to provide community revolving funds to communities to engage in activities that are climate resilient. And one of the things that the project has just come in, but previous experience over the years, and even some of these innovations, that are brought about by the government, we have seen cases that the funds are not duly utilized, for the purpose, and repayment becomes a problem. So I'd like to know, aside from effective monitoring and evaluation, what other things could you suggest? What do we differently, to see that the funds are being utilized, as appropriate as they should be, and of course, how we can ensure that repayment is ensured. Thank you very much.
Yeah, okay, thank you. I think this provides already for quite some interesting responses by our panel. So I actually would go from right to left. So we heard about the question, and you can pick any question that you feel like you have something to contribute. So we heard the question around the systematic approach, so that also other countries or countries can benefit from these approaches. We had a question around scales and how to scale up the different instruments. We had the question also around how to reach really the community, reach and empower the community level. That's how I take your question. And then the last one was around the disbursement and how to make sure that disbursement mechanisms will reach the end users. So Sarah, maybe starting with you, if that's okay. Sarah Ahmed.
Thanks everyone for the question. So I'll try to touch on all of the questions. So on the topic of access, so relating to the Global Shield, there will be country packages, and this includes sovereign, enterprise, communities, and so that would be the opportunity to structure something there. The communities would be part of the consultation process, and so that would be the opportunity to shape and design this. So this is a totally different approach to what we're used to. This is a demand-driven Global Shield, which means the countries get to define the packages as well, and that it is the Global Shield and the resources. I mean, the resources now stand at over 200 million euros. This is definitely a starting point, and it's important that we show how this will play out. The learning dividends through each country process is quite critical to shape the future of the Global Shield. In relation to strengthened institutions and strengthened communities, this is not a trade-off with the Global Shield, and adaptation and resilience tools and strengthening institutions. It's all part of having this, building this protection unit. It's not just one or the other. It's actually that this has to come together. And so part of the packages could be that, XYZ institution or community needs this mode of strengthening, or maybe it needs to know that these solutions are options for them that they can take. So the point is, right now we have very limited options. Some have no options, and you just absorb the loss. And what we want are institutions, our communities, governments that know exactly what composition of tools are available for them ahead of time, prearranged, trigger-based, so that we're not scrambling at the end. And we've been scrambling for years now. And this is something that can't continue, which is why the finance ministers with economic cooperation ministers have put together the Global Shield with the intention to fix the architecture and to figure ways to reach communities more directly, as opposed to what's happening now, which is it's not reaching them now, and we know that. So I think the monitoring and evaluation part can play an important role through the learning dividends, so to inform back on how the design could be improved, and then to take steps to do that fairly quickly. Stop there.
Okay, moving one further left.
Yeah, I think the questions really show, Sarah, that the Global Shield touches on the very right aspects, having communities involved in the design of the programs, making them fit to understand the situation they are in and to prepare for the support they would have to provide to their citizens. Getting them really deep into the subject matter, then the Dominican Republic, it must have been terrible to experience these rainfalls, which were never there before. And this situation, the scenario you described is really what we have encountered around the globe many times, that after the disaster strikes, you try to get organized, and that of course takes time. And I think the analysis, the institution building around analysis of risks and also forecasting, another very important topic, that will help to prepare for a wider range of scenarios which we are going to face in the future. And I think the Global Shield provides a very promising approach, and with business models such as the one I presented around global parametrics, there are already solutions out there, and we can learn from them because they are into forecasting and risk modeling business and can provide their learnings. Yeah, I think that's all I would like to add, because I touched on a couple of the questions already in the models I presented, and you can contact us in order to provide to get more information. Thank you.
Yeah, thank you. Lee, what are your thoughts?
Yeah, thank you. Thank you for the previous speakers as well for providing some sort of responses to the questions. And really, the question from the Dominican Republic is a question that policymakers have been struggling with. Most of the products are really sovereign-based or community-based high level. The question always comes, how do you reach the grassroots people? How do you reach the person down the street who's actually his house been washed away by the river or something like that? So there are approaches like the micro-level insurance to try and bring that down to a lower and lower level communities, and also either through collectives. Like I know, I'm not sure if Christian is still on the line, but in Fiji they have the communal cooperative type based insurance approach, where, say for example, that the Sugarcane Farmers Association buys products on behalf of their members, but the members actually access that individually, not as a collective. That is just one approach, but just if I can combine the questions into a more high level response, and this is really about behavioral change. While we're doing infrastructure resilience, we're doing financial resilience products, there needs to be, and it goes to the question from our friend from, I think, Nigeria, working in a community, about behavioral change. There is case example of a disaster happening, and but there was through a superannuation fund payout, doing payouts for people to be able to repair their houses. People go and buy cars instead of repairing their house. So there's a behavioral issue. So we have a tendency to be blasé about disasters until the disasters hit. So in terms of the actual behavioral changes about infrastructure resilience and also financial resilience and behavioral systemic changes. That takes a bit of time, and in response to our friend from India, around when I responded around the answers in mitigation, I think the answer is not just mitigation, that's the long-term goal. The long-term plan is you start with mitigation, but along the pathway there's a whole lot of stuff we can do. There obviously with from a NDMO perspective, there's in my previous response I spoke about integration there, so there are other responses besides just the disaster response, things like building codes. I know there's some sensitivity around building codes when the rich can actually build houses according to the building codes, whereas people in the community probably struggle. But maybe a phased approach where slowly you start building resilience and building the habits to be able to build with resilience aspects, but noting that I can just rephrase that by saying, when do you know you've actually reached resilience? So it's an end game. It's not an end game. It's an ongoing relearning and revolving dynamic that over time we'll just be able to increasingly build our resilience, but at the same time adapt to new risks. I don't want to be a bearer of bad news, but we all know disasters will happen. We can't stop them. The intensity will change from time to time, and obviously the science is showing that they're getting more intense, more frequent. So we also need our response mechanisms need to be adapting all the time. So sorry, I can't give you one answer for all those things, but the progress of really trying to put those in place adds towards, and over time, have behavioral change. Thank you.
Thank you, Lee. And I would now turn to Sarah, maybe for some takes.
Sure. Just a few sort of various thoughts on those questions from me. I think when it comes to the private finance side, the sort of commercial insurers, I think there's a lot that we can learn from the kind of playbooks that they've put in place that, I've seen happen in, for example, in the UK when we've had flooding, disasters, etc. They now have pretty good playbooks there where they get the company on the ground in vans dotted around the area to help people. They have priority phone lines, etc., to ensure that the most vulnerable are served first, and they also sort of change the burden of proof in order to get those initial payments out and have a really rapid response. So I think there's lots that we can learn from that. I think on the question about the preparedness and the capacity building of communities, I'd just like to emphasize all the work that's going on at the moment on the just transition, dealing with the carbon climate transition. It doesn't just need to consider the most vulnerable in society, it also needs to involve the most vulnerable in society. And I think when it comes to some of these points around prevention being better than cure, one thing that we can really bear in mind there is the importance of green infrastructure in building adaptation. And the answer to increased resilience isn't always to pour more concrete. Sometimes it's around coastal buffer zones or considering the hydrology within a catchment, etc. So I think we can think about this adaptation work and involve insurers in things like payments for ecosystem services and some of these kind of potentially broader sustainability programs. And other examples in terms of the point that was made earlier on Build Back Better. I think that's so important. And just one example from the UK is our flood scheme now can provide an additional payment to somebody that's experienced loss and damage through an extreme weather event, to actually make some kind of improvement like a flood-proof front door or improved drainage around the area, to actually ensure that next time there's more resilience and maybe even less likelihood of a claim being made. So that kind of investment in that kind of recovery stage can be really beneficial. So I think there's lots that we can apply there.
Thank you. One quick last intervention by Krishna, who's online with us, and then I'd like to wrap up the panel.
The audience, but what I can say is the solutions that we have been developing have been co-created with the communities or the beneficiaries. So therefore, there's a lot of work that has gone into involving the communities and the beneficiaries while developing the solutions. The second thing is also when we are offering parametric insurance, which is, as it is a very, very complex product in these markets, in these underdeveloped markets, a lot of investment has been made in terms of financial capacity, financial skills and capacity building of partners that deliver the product. It's an ongoing effort, and also we are recently added elements of community-based disaster risk management practices, which has been recently adopted as an intervention by the Fijian government through its National Disaster Management Office. So therefore, it's just not straight financial or say insurance literacy. It's combined with good practices of household disaster risk management that the beneficiary has to take. It's not that they buy insurance and throw caution to the wind. And then there is a very interesting sub-project within the implementation that we are doing is the one involving the social protection or the social welfare recipients. So last year, we did a very small pilot covering 274 social welfare beneficiaries. So already seeing the value, the government of Fiji is now increased the size to 2,000 beneficiaries and paying the premium. These are the most vulnerable people in the society, and the ambition is to scale this over the next 3-4 years to ultimately reach all the 87,000 beneficiaries. So what we are doing directly fits into what the ambitions of the Global Shield are, and we are very happy and we look forward to working both with the Global Shield as well as the V20. Thanks.
Okay, we approached the 1.5 hours mark, so I'd like to close the side event, maybe with like just a quick thought. I mean, you heard the notion of a mosaic of solutions. I think the side event helped in finding some of the yellow, red, and green stones that we need. But I think this COP is also about getting the bigger drawing right. I'm really happy about the V20 group taking initiative and leadership on the topic. And I also hope that in the final days of the COP, a more clearer picture will emerge on how we are putting together the mosaic. Thank you very much. Quick clap to the panel and also the tech team in the back of the room. Thank you very much and have a good remaining days of the COP.